Let's ask Drew Pettit now. He's the U.S. equity strategist over at Citi. Drew, do you want to jump in here and cast a vote one way or the other on what you think is going on with yields today?
I'm going to keep it simple and stick to the economy on this one, probably be a little bit less fiery than Steve and Rick there. But look, industrial production came out this morning. It was actually pretty good. You were looking at 1/10 month over month in the survey coming into it. You got 4/10, and that's still moving up and to the right. I'm going to stay out of kind of the intraday moves and a little bit of the noise, but yeah, the economy's working. There's more stocks with positive earnings growth. How you offset higher rates in equities is better growth because it's not a fixed asset. So that's the kicker. It's growth. You get higher growth, you can deal with higher rates. And I think that's why small caps responding so well today.
Yeah. So the way that I try to think about this is, I can't help but traditionally have thought of Warsh as more hawkish, but I understand he's more dovish now. But is the market trying to figure out, if that would mean even a too hot economy, right? I mean, do you worry or sense that inflation at 3% or around that level is too high? Is the stock market telling us it's not a big deal, it's fine?
For equities, that's not a problem. We've done a lot of this work historically. That actually means pretty decent pricing power. What's actually interesting on the inflation side from an equity perspective, it's inflation differentials. That's actually been a really bad headwind for stocks over the past couple of years. So price inflation moves top line, okay, we get that. It's the cost input inflation that's actually been much higher. So that, in a sense, it really does hurt margin trends. That's actually normalized quite a bit in the recent quarters. And when we look ahead this year, it's about to normalize. Top line price inflation should be really similar to cost inflation.
Right.
So that's an abating headwind.
No, I take your point. It's less of a squeeze on companies, and so they can pass it along. But consumers don't want them to pass it along, Drew. Come on. Another year at 3%. You don't have to weigh in on that. But that's my observation. I do think people are a little frustrated. Does it drive the investors into metals on the margin? Do you have a point of view of why that might be a play? Is that just a hedge fund chase? Is there something macro to say about that, or no?
Yeah, there was a bit of some kind of hedge fund and macro chasing and momentum trading. You even see it in the ETF flows on precious metals. But yeah, honestly, when you're kind of concerned about runaway inflation and how central banks are going to react, gold just becomes a really easy inflation trade. So yeah, people have gone there. So I think that's something you want to watch when you're thinking about longer term inflation risks. It's probably not going to show up in the stock market anyways. Lots of things kind of moving interest rates here and there. But again, rate vol's still pretty low. It's a pretty good setup for equities still.
And I want to just mention your corners strategy here, where you like small cap value, but you still like large cap growth. You're talking about some of the regional banks and then some of the big guys sticking with an NVIDIA, Microsoft, CrowdStrike, Palantir, the healthcare names, Boston Scientific and Lilly. So you're saying ignore the middle.
Yeah, it's funny when you're in this good growth environment, you got a secular driver in AI. You want risk, and you don't really find risk in the middle. You find it at the corner in the size and style box. And look, growth revisions are still moving higher for large cap growth companies. That's great earnings momentum. On the other side, in small cap value, you actually don't need revisions higher. You can actually cut estimates for 2026, and growth is still going to be good there. It's going to inflect higher. So buy growth, buy momentum in growth, and buy inflecting growth, and you should have a pretty good portfolio to withstand, well, a lot of the stuff that got Steve and Rick heated leading into this.